One interesting side note, which I take as signal, and it's very interesting, is that gold mining companies are now putting a portion of their treasuries
Mm,
into Bitcoin, right? So you see that Bitcoin is
Yeah.
demonetizing gold. You see that gold ETFs are being sold off to buy Bitcoin ETFs. Gold mining companies are buying Bitcoin on their treasury books. So that is a clear signal that gold is in the crosshairs. Gold will be demonetized. And that puts you at 800,000, 900,000 per Bitcoin because gold is now $21 trillion asset. So that's the bull story right there. Corporate treasuries are bullish. They're buying a lot, but they're doing obviously Wall Street financial chicanery that we've been reporting on for 20 years. It always ends up blowing up every cycle, and then we'll see another blow up in this cycle.
Gold was supposed to be untouchable, the ancient store of value, the ultimate hedge against chaos, the fallback when currencies fail. But now, the unimaginable is happening. Gold's fiercest supporters are abandoning it. Not traders, not hedge funds. The miners themselves. Yes, the very companies that dig the wealth we've relied on for centuries are quietly buying Bitcoin and stuffing it onto their balance sheets. That's like Coca-Cola secretly investing in Pepsi. It's not just a financial decision, it's a confession. A confession that the future of money may no longer come from the ground, but from code. And it gets even more insane. Max Keiser, the outspoken journalist who predicted this for years, is sounding the alarm. Bitcoin is devouring gold's narrative in real time. Capital is fleeing gold ETFs, and Bitcoin ETFs are swallowing it all. If even a small fraction of gold's $20 trillion market cap flows into Bitcoin, the math goes nuclear. Six-figure Bitcoin isn't just plausible, it's inevitable. But Max isn't celebrating. He's seen this movie before. Wall Street will try to force Bitcoin into the old system, cloaked in jargon and tricks. It won't work. It never does. This isn't hype. It's a slow-motion financial earthquake, and most of the market doesn't even know it's coming. So here's the question burning under every chart, every ETF inflow, every miner's move. As trillions pivot from gold to code, how will the markets bend, break, or explode under the weight of this digital tidal wave? Are we witnessing a quiet reset, or the opening act of a financial revolution? Let's take you back to Max Keiser's explosive interview to get the full picture. Please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the rest of the video.
Well, having President Bukele as president of Bitcoin country is helpful because he's the most popular leader in the region. He's the most popular leader in dozens of countries. When they ask them who's your favorite leader, they'll say President Bukele. And President Bukele, of course, is associated with Bitcoin. So that opens the doors. And, we recently met up with the folks in Panama. And they are now moving toward what I call the axis of Bitcoin, right? Central American companies and countries that are coming into Bitcoin. We had a meeting with the financial minister of Pakistan a few weeks ago with the president. And the news came out shortly thereafter that they're now exploring Bitcoin strategic reserve. So every country in the world, every sovereign wealth fund in the world, and sovereign wealth funds, the biggest ones are the biggest part of a few of these countries. They're now exploring Bitcoin or investing in Bitcoin. So it is now finding its way into the sovereign level. So Bitcoin is definitely embedded in the sovereign level, and they are increasing their allocation, just like Larry Fink, I believe, allocation went from 1% to 5%. Now he's talking 15% on portfolios. So the hedge funds, the managed money world, they're upping their allocations. The sovereigns are getting involved. Sovereign wealth funds are getting involved. So it's already on the sovereign level. It's already working its way in. We believe we have a blueprint for this that was developed in El Salvador, the legal blueprint, the communications, how to manage it. So that's something that we've talked to Panama about. Like, here are the steps we took to get to El Salvador level. We think El Salvador is the first country out of the fourth turning, in large part because you've got President Bukele plus Bitcoin. So, we're already in the good times phase, and other countries are entering the bad times. In the United States, of course, they are very involved with Bitcoin thanks to the orange pilling efforts of Bitcoin Magazine. in the Trump administration and family. So they are definitely on the Bitcoin board. And so they are obviously a big player. They're probably the biggest of the G7 that's involved in Bitcoin. And, I think you're going to see some news coming out of the Mideast. It makes perfect sense. They've got all that energy that they would want to also be in Bitcoin. We get some news still coming out from that region. And so it's already happening on the sovereign level. It's easy to see where this is going, and so it doesn't seem like a stretch. The total addressable market is 400 trillion. The total addressable, all the fiat money world, it's literally a Ponzi scheme, and you can't taper a Ponzi scheme, and it's starting to unwind. Now, there's I believe, an effort that they believe in Washington and elsewhere, they're going to keep this Ponzi scheme going. I think we're at the end game. I think they're at the end game for both the central bank model and the nation state model. After 300 years, I think this is all coming apart. And Bitcoin will emerge as the global reserve standard. And so that means, and everything goes to zero against Bitcoin. So, I think Michael Saylor has a $13 million per Bitcoin prediction out there. And I can see how you can get there, because you're talking about squeezing 400 trillion into 21 million units of Bitcoin, right? The price discovery tells you where the price is going, and they can't make any more of it. So it's not hard to come up with these numbers. And, the primary use case of Bitcoin is separating money from state. So when corporations are buying Bitcoin and you're buying shares in those corporations, you're reuniting money and state. So it's going backwards from the primary mission, right? The vector that it's on is to separate money from state. And it's as profound a change to society as separating the state from the church. Right, that was an amazing leap forward for humanity in a lot of ways, and gave us the Enlightenment. And separating money from state sets the stage for something similar to happen to society, a huge leap forward of self-sovereignty, and that would be self-hodling Bitcoin. On the corporate treasury front, you've got a lot of companies with a lot of cash who are buying a lot of Bitcoin. The thing about Michael Saylor is that back in 2020, he had $500 million on the balance sheet, and he could have done what every single CEO in America has been doing for 20 or 30 years, and that is to buy back his own stock. That would boost earnings per share, which would make his stock options go higher, and he could make a lot of money that way. But he took the very bold step of trying something no one had tried before and done before. He put that $500 million into Bitcoin, and he set in motion something that has profoundly changed corporate finance. So the melting ice cube was addressed. He went from the problems with fiat money to Bitcoin. Then the next step was, I can actually go into the market and sell stock, and I can sell bonds, and I can use the proceeds to buy Bitcoin. So then we went into this idea of dilution equals accretion. Because normally when a company sells stocks or bonds, you're diluting the earnings per share, and therefore the multiple would drop down, and so would the price. So he's saying, no, actually dilution, and with our company, it's accretive, because we're going to instantly buy Bitcoin, and Bitcoin is going up forever. So that's the beginning of his at the market stock sales, etc. And stock is looking good. It's getting a lot of attention. Then he goes into another phase, which is these convertible preferreds and other kinds of stock offerings that would appeal to different pockets of money. Some are looking for volatility, some are looking for income. And he had the biggest IPO of 2025 so far with one of his spin-offs. And that money is going into the balance sheet, and he's buying Bitcoin. And I think that Michael Saylor is a one-off, just like President Bukele is a one-off. I think that these other companies that have come along that are trying to do what he's doing, they don't think they know what he's doing, but they think they know what they're doing and what he's doing, and they're not necessarily going to be successful at it. And they've already said that if their stock price trades at a discount to their Bitcoin position, they're going to sell their Bitcoin and buy back their stock. So it's going to unwind those positions, where I don't think Michael Saylor and Strategy would ever do that. But these newer companies have already said they would do that. So what we have here is the makings of another blow off top, because you're going to have lots of companies all over the world engaging in this strategy, taking out debt, buying Bitcoin. You're going to see a typical correction of 10 or 15% become a 30, 40, 50% correction because of the unwinding of all these corporate treasury companies. Could be the story of the next pullback. And Saylor himself has said Bitcoin will go from 220 or 250 back to 180. Like, he's already anticipating this. And then the cycle will begin again. This idea that we will no longer, we've broke free of the 4-year cycle, right? We've said that at the top of every 4-year cycle, that we've broke free from the 4-year cycle. And then we have a big drawdown. And people, it's like, oh, why didn't I realize that nothing changes and everything is always the history rhymes over and over and over again. So as a Bitcoiner, I like to see the demand for Bitcoin. Yeah, you've removed one of the charming aspects of Bitcoin is you don't have to follow the companies and all the risks that come with owning stock in a company, the management risk, the regulatory risk, the market risk itself, and the competitive risk. These are risks that these companies deal with every day. Sure. And so on a risk-adjusted basis, just owning Bitcoin, you don't have any of that risk. And you've got still a Keiser rate of, I think it's still like 50% or something very, very high, which is beating every money manager in history. It beats Warren Buffett by like 2 or 3x. So what more could you possibly want?
What's shifting beneath the surface is that capital isn't just fleeing gold, it's reallocating. Marathon, a large Bitcoin miner, recently added 400 Bitcoin to its treasury, confirming that miners themselves are acting as accumulation hubs now. In effect, the very producers of hard money are transitioning allegiance to digital hard money. Analysts suggest that even a modest rotation, say 1 to 2% of gold's $17 to $30 trillion market cap into Bitcoin, could send Bitcoin soaring into 6-digit territory. The rationale: Bitcoin's fixed supply and programmable nature dwarf gold's physical constraints and lack of yield. Meanwhile, the inflows to global crypto ETFs recently hit record territory, approximately $5.95 billion, just as Bitcoin eclipsed fresh all-time highs, underscoring rising institutional conviction. That said, gold isn't dead. Deutsche Bank forecasts Bitcoin might co-reside with gold on central bank balance sheets by 2030, complementary, not replacement. But the momentum is asymmetrical. Gold has long carried the narrative of scarcity. Bitcoin now carries it forward with liquidity, programmability, and on-chain proof. If that narrative continues winning over capital allocators, the untouchable status of gold may yield to the new digital frontier. Let's watch more clips from the interview.
And it makes sense to me that they would want to keep their treasury, their cash holdings in Bitcoin. To me, it seems obvious. And I think we've said that long ago about the oil companies or the oil countries like Abu Dhabi, that they should be holding gold, Bitcoin instead. So that will be an interesting move. And there are the first gold companies starting to do it. But once you see the energy companies, that's going to be the real mind shift happening. The mindset is shifting radically in the markets if that happens.
Yeah, because right now people focus on cost of energy for mining Bitcoin.
Yeah.
But they haven't really grokked this idea where energy companies will be buying Bitcoin in the open market, like Aramco, for example, a huge company, hundreds of millions of dollars worth of that. They've got tons of cash and they are now selling bits off in the public markets, and they've got a lot of cash. And if they said we're going to start buying Bitcoin aggressively, that would trigger an avalanche of buy orders.
What do you think needs to change in order for Bitcoin to be adopted more as a medium of exchange as we move forward to the future?
Oh, those payment systems are coming along every day. QR codes, payment codes, they're always new ones all the time. So it's definitely gaining traction on the payment side. And people are just going to take it at their own pace. And generally, the adoption is driven by crisis. And if we have another bank crisis, then another huge wave of adoption will happen. And also you have these circular economies. So in El Salvador, in towns like Berlin, and there's a couple of more, where people are earning, spending, and saving in Bitcoin. So everything is Bitcoin. And it's a circular economy. And so you already see those pockets happening in towns all over the world. And so when they start to commingle, when they start to merge into bigger and bigger regions, then you go into a circular global Bitcoin planet. when you say Larry Fink has 600,000 Bitcoin, no, he doesn't have 600,000 Bitcoin. The people who bought his ETF have a combined 600,000.
Yep.
So the retail participation is extremely high. If you consider that you've got these, it's exposure to Bitcoin, right? So that's a different question.
Right.
But as far as having Bitcoin in your life, in your portfolio, you've got huge retail interest with the Bitcoin treasury companies, with the ETFs, and that's gone global. So you have a big retail participation. Also, there's a lot of Bitcoin trapped. We saw recently something like 70 or 80,000 Bitcoin over there at Galaxy was transacted. They suddenly wallets that people thought were lost are not lost. They're actually back in play. And a lot of these banks are going to offer the ability to put Bitcoin on deposit and use as collateral for your traditional finance account, which is tied into a credit card. So now, let's say you've got 5-10 million in Bitcoin. It's in a wallet. You haven't touched it in years. You activate it. You stick it in your Schwab account. It's now marginable. And you're trading Bitcoin treasury companies, and you just use your Amex card, which is debitable on your Schwab account. You just engaged in a Bitcoin transaction, essentially, because that transaction was collateralized by your Bitcoin. So Bitcoin as a pristine asset will make its way into the banks, and a lot of Bitcoin is out there. It's a $2 trillion asset, but it's not an asset that's fully monetized yet. There's a lot of paper Bitcoin, a lot of exposure to Bitcoin, but the Bitcoin itself is still in the shadows, and that's coming out of the shadows because the rails to the retail banking are opening up. But like I said before, you're not separating money from state, you're reuniting money and state. So there's an issue with that as far as the use case for Bitcoin and what it ultimately means. And that's the message I would like not to get lost, is that ultimately we would be better off if we all were self-sovereign. But, that's still a message that is being delivered, and a lot of people are hearing it. Yeah, I was very interested to hear Tom Lee on CNBC talk about Ethereum. And he's got a price target for Ethereum. And he has no story for that, though. It's like, well, it's going to grab a percentage of Bitcoin's move, right? So there's actually it's no pitch at all. And so now, because it's unit price bias and it's easy for people to say, well, it's at, a lot less than a Bitcoin. It's going to catch up to Bitcoin. So it's CNBC playing their usual game of shooting for the lowest common denominator of their audience, right? They don't have a sophisticated audience. And it's sad to see, but that's how they make their bones. So have at it, boys. Speaking of Jack Dorsey, his new BitChat is really cool because you don't need the internet to run the network, right? It's nodes on batteries on local area networks, right? And so this is the answer. People always say, what if the internet goes down? You don't need the internet to run Bitcoin. And so that's a great technology that I was happy to see. And it's cheap, and it's reliable, it's redundant, and it's available. And it just, it's actually the only property that can't be confiscated. If you have any other form of property, it can be confiscated. Even if the internet goes down, doesn't mean your Bitcoin disappears. I mean, as long as you've got the network running in some form, everything is still there. The difficulty adjustment just, makes the adjustment, and we're still up and running, and it's still behind an impenetrable wall of encryption. It's the only non-confiscatable, uncensorable form of property that you can avail yourself to at no cost, right? Never before history has this existed. If you had gold, you need a vault. If you have a house, you need security. You need security to guard your property, but not so with Bitcoin. And this is one of the liberating factors in El Salvador. People realize this. And, they like the fact that they've got money that nobody can touch. It's theirs. It's growing in purchasing power, and it gives them hope. And that's why you have this emergence of the fourth turning in El Salvador, is that there's a groundswell of hope. And a lot of it comes from Bitcoin. And of course, the president is doing a fantastic job, but you put those two together and it just adds up to an exit of the fourth turning and a beginning of good times.
A monumental shift is underway as capital pours out of gold and silver and rushes into Bitcoin, signaling a new era in global finance. October 2025 marked a turning point where traditional safe havens crumbled and Bitcoin surged past $112,000, briefly touching $125,000. This is not just about short-term volatility, but a foundational reordering of how investors preserve wealth. The so-called Great Rotation reflects a growing belief that digital assets, not precious metals, are the best hedge against inflation, monetary policy failure, and systemic risk. Analysts have long anticipated a moment like this. Bitcoin's fixed supply, decentralized nature, and increasing institutional adoption make it a more compelling asset in a world where central banks continue to devalue currency. ETFs are pulling in billions, corporate treasuries are being converted into Bitcoin, and even sovereign wealth funds are reportedly exploring strategic exposure. What used to be a fringe movement is now forming the backbone of mainstream investment strategies. The pressure is mounting on traditional financial institutions and metals-focused portfolios to adapt or risk being left behind. Max Keiser has consistently pointed to this moment, where the market realizes that Bitcoin is not just digital gold, but the future of monetary sovereignty. As altcoin season speculation builds and crypto infrastructure matures, this rotation looks less like a trend and more like a permanent migration. The question is no longer whether Bitcoin is legitimate. The question now is whether investors, institutions, and even governments can afford to ignore it any longer. The world is moving on. As we wrap up, do you think this great rotation marks the permanent end of gold's dominance? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.